My goodness, you guys want to retire quick. Well, hey, I do too, but can we do it through Microsoft? In other words, how many shares of Microsoft stock do we need today to retire by 2030? So Microsoft is one of the top 3 biggest companies, the most valued company in the world. And most likely Microsoft may stay the top 10 most valued company for decades to come. Because hey, it's Microsoft. So knowing that, you guys already know that retiring off Microsoft is completely possible. But how much money do we need to be invested today to retire by 2030? That is the question. Hey guys, I'm Curious Pejjy, and I'm a very curious person. I'm curious to know how many shares I need today of Microsoft stock to retire as early as possible and start enjoying life by 2030. You know, having that mansion by the lake or in the mountains in BC with a nice roadster Tesla in the driveway. That's the dream. Anywho, I got to work and the results are pretty interesting. Let's get down to it, but first, don't forget to smash that like button and subscribe if you haven't already. Let's go, man. So the first thing that we have to figure out is how much our monthly expense is going to be in the year of 2030. At the moment, the average monthly expense today, in the US at least, it's about $5,000 monthly. I mean, sheesh, that's crazy. That's just 60 grand. That's how much it is, 60 grand annually, and that's just expense. I mean, that's just absolutely crazy. And that's the average. But there is good news because I did more digging and it seems like this $5,000 a month is for a family of 2. So you and your wife or you and your girlfriend or you and your boyfriend, whatever, I'm not judging, but you know, that's what it means. And honestly, it makes more sense. But in this video, let's be selfish and say that you have your own goal individually to retire off Microsoft stock. So instead of looking at it as a monthly expense for 2 people, we're gonna look at 1, and that comes to an average of $3,200 monthly, which comes close to 40 grand a year. That's interesting. It'd be cheaper if I had a significant other. Anywho, giving that $3,200 monthly expense of an average inflation rate of 5% till 2030. I know guys, if you guys have been watching my video, 3% is what I do usually, but it seems like this decade, we're gonna have a bit higher inflation than usual. So I bumped it up to 5%. And we get $4,600 on a monthly basis in 2030. So that means by 2030, our $3,200 monthly expense today is gonna turn to $4,600 then. Bruh. I mean, that's messed up. That's crazy. I mean, that's just a life of just paying expensive. That's like minimum expenses, minimum lifestyle. So obviously we don't want to live a life that we just live to pay expenses. So what I did was that I bumped it up another $1,000 because we want to have a lot of fun. We want to be able to travel a bit, buy some things, buy some nice toys, enjoy some life. So that makes our monthly expense to $5,600 a month by 2030. Let's round that up to $6,000 for simplicity. That comes down to $72,000 on an annual basis by 2030. I mean, sheesh, 72 grand. Honestly, guys, if you're making 72 grand annually through investments alone, just go to Indonesia, man. Go to Bali or something. Man, you could live like a king with this amount of income. It's absolutely crazy. But anywho, let's just say we're gonna stay in North America, and we need 72 grand yearly by 2030 to retire comfortably. Now let's say by 2030 you decide to sell your entire Microsoft stock position and to put it somewhere safe like the S&P 500 index fund, which pretty much guarantees you an 8 to 10% annually. But let's go ahead and say 7% to be conservative. Now obviously guys, not every year you're gonna make 7%, 8%, 10%. One year you may lose 10%, maybe 20% you'll lose, but then the year after that it may shoot up 20%, 30%. At the end of the day, we have 100 years of history of the S&P 500 and it gives about 8 to 10% return. I'm lowering that down to 7% to be conservative. Now, that number that needs to be sold out of Microsoft to be put in the S&P 500 needs to be $1 million. I mean, sheesh! You guys ready to make $1 million by 2030? Whew! But guys, $1 million is required if you're looking forward to retire for a very long time, like 42 years. I mean, that's quite a long time. So now that we have our monthly expense budget and how much we need to live off of it, let's go find out how many shares we need today to retire by 2030. So here's my how to retire chart. If you guys have been following me for some time, you guys already know how this works. It's very simple, straight to the point. We got the bear case, base case, and the bull case. We got multiple scenarios here to show us and give us an idea on how we can potentially, how many shares we should put today for it to grow by 2030. Now, obviously, this is all a prediction. I'm not saying that one of these 3 years are going to become right, but It's a prediction, so you never know. But the chart is extremely simple. We got the current stock price right now, which is around like $260 per share at the time of the recording. We got the total revenue, the net income, shares outstanding, EPS, PE, which I put it all at 25 because if you look at the PE chart history, it's gradually rising for Microsoft because they are a cash machine. They're making a lot of money, man. I mean, Microsoft, it's an extremely boring company, but they make money. They make a lot of money. We got the average growth year over year. We got the Microsoft stock price, the market cap, shares needed now, shares valued today. We got dividends here. Microsoft does pay a good amount of dividends. Shares after drip, shares valued after drip. It's gonna get pretty interesting. And obviously shares valued by 2030. So let's first go ahead and find out what the stock price and market cap is going to be. You ready? Let's go. So in the bear case, I put here as a 10% growth from now to 2030. Personally, in my opinion, I don't think from now to 2030, Microsoft's gonna do any less than 10% in earnings year over year. Microsoft is a service, and honestly, every business kind of needs their services. The company that I work for now, we all switched to Microsoft like 3-4 years ago, and we are extremely happy with it. Office Exchange, Office 365, all that, extremely fast, right on point. And if you need help, man, you can just get on a call with them and they'll be with you within like 5-10 minutes, and you can do a screen sharing and the problem is solved within minutes. It's absolutely insane how easy it is and how convenient Microsoft has gotten. We love Microsoft. And you know what? We do pay on a monthly basis for the subscription, but it's pretty darn worth it. So yes, Microsoft is an amazing service. Their products are one of the best products in the world, and I believe it'll continue to be unless something else comes and disrupts them, which honestly, I don't know what or even how anyone could come and do that. But anywho, in the bear case, with a 10% growth from now to 2030, we get a total revenue of $413 million over that, and a net income of $157 billion. With a PE of 25, we get a Microsoft stock price of $545 per share and a market cap just about $4 trillion, which honestly, you really think from now to 2030, Microsoft is only gonna double? I don't know, man. I'll tell you guys what I think at the end, but I don't know. That doesn't sound too realistic to me, which is why we got the base case. In the base case, we have an average growth year over year of 16%. Now, 16% is what analysts are saying, between 16 to 19% for the next 5 years or so. So I put it at 16%. And with that, we get a total revenue over $595 million, and with a net income of almost $239 million. With a PE of 25, we get a stock price of 827, with a market cap almost hitting 6 trillion. Not bad. But the bull case though, year over year growth of 25%. Now, doing a 25% year over year growth for Microsoft, they have to come out with some sort of a cool product or do more buyouts like they did with Activision. They're gonna do more of those to have a higher growth rate, which for some reason, I have a feeling that they will do that. But anywho, at a 25% growth year over year, we get a total revenue of $923 million almost, and a net income of over $437 million. Now here's the thing, guys. You guys can see that the net income is almost half of the total revenue. And that's honestly how I see Microsoft becoming by 2030. If we look at their past history, their past 4 years of total revenue and net income, the net income keeps increasing faster than the revenue. I think right now we're sitting at around 30% or just a little bit over 30% of total revenue being net income. And that's growing. So by 2030, we can see, potentially we can see the net income becoming 35, 40, 45% of the total revenue. Because hey, they don't have that much expenses. All their investments that they worked on very hard is now paying off. And now they're just sitting back collecting the money like a flipping bank. Yeah, Microsoft is a bank. They make bank. With a PE of 25, we get a stock price of 1,514 with a market cap hitting over 11 trillion, almost $11 trillion in market cap, which is absolutely crazy. Now we found out that what the stock prices are for the bear, base, and bull case. Let's figure out what the stock prices you need today, how much shares you need today to retire by 2030. But first, have you smashed that like button, man? Come on, man, smash that like button. Let's get down to it. In the bear case, the amount of shares you need now to retire by 2030 is 1,837 shares. Shares valued today, that's about over $477,000. I mean, sheesh, you're literally investing half of it now to get half of it in 2030. I mean, I mean, that's just the bear case if that happens. I mean, that's absolutely crazy. I don't think anyone has around $477,000 laying around to plow into Microsoft. I think you're better off with real estate with that. But anywho, or Tesla stock. Bruh. But anywho, let's move on to the base case and see how much we need. In the base case, we need 1,210 shares, which that equals to about over $314,000, which is, again, I mean, better than $500,000, but 314,000 is not pocket change. I mean, that's crazy. But the bull case though, if they grow at a 25% yearly from now to 2030, then all you need is 661 shares, which is valued over $171,000. Now, obviously, that's still a lot of money, but nowhere near $500,000 and $314,000. I mean, that 171,000, I think that's much better. But we're not done just yet because Microsoft pays a dividend. So if you guys decide to plow the bear case, base case, or bull case shared value today from now to 2030, well, you get dividends. And if you guys apply for a DRIP program is pretty much a dividend reinvestment plan. So any investment you guys make get automatically reinvested back in the company, which results in more shares. So knowing that, and if you guys decide to do that, we need a lot less shares and a lot less money invested. But how much? Well, this is how much. Check it out. At the moment, Microsoft gives about just below 1% or $2.48 per each share that you own. So pretty much if you guys decide to go all in Microsoft and plow $477,000 into Microsoft right now, you would make in dividends over $38,000. If you guys decide to use that cash or do whatever you guys want, well, that's your choice. But if you guys are planning to do a reinvestment plan, well then realistically, all you need is 1,688 shares today, right now, instead of 1836.5 if you decide to do a DRIP. That comes to a value of over $438,000. I mean, sheesh, that's still a lot of money, but better than $500,000. I mean, now you're just gonna pay a bit less than $500,000. Bruh. Yeah. The base case, however, tells a different story. If you decide to put in almost $315,000 into the stock from now till 2030, you get a dividend of almost $26,000. But with a DRIP plan, all you need is 1,111 shares opposed to almost 1,210 shares, which that comes to a value of almost $289,000. Again, better than 315,000, but still not pocket change. But the bull case is a much different story. With an investment of over $171,000, you would get a dividend from now to 2030, almost $14,000. With a DRIP plan, if you're planning to do a DRIP, then all you would need is 607 shares, which that would equal to almost $158,000 value today. And obviously, if you hold that and do a DRIP plan from now to 2030, there's your 1 mil. So we all better hope that the bull case will become true, because 25% is actually kind of blessed for Microsoft. And all we need is 600 shares to get a mil by 2030. I mean, that's pretty darn blessed if you ask me. Personally, we can throw away the bear case. There's no way that Microsoft is going to continue to grow at 10%. I mean, not continue. They're not growing at 10%, and I don't think they ever will. The base case makes more sense, but I'm in between the base case and the bull case. I think from now to 2030, Microsoft can grow from 18% to 22%. And I can see them reaching a valuation of between $7 to $9 trillion by 2030. I'm pretty confident about that. But hey man, to be honest with you guys, Microsoft is a great stock to have in your diversification portfolio. At the moment, personally, I'm going all in into Tesla stock, but if I'm not going all in into Tesla, I would definitely have Microsoft in my diversification portfolio. Again, I'm not diversified right now. I'm all in into Tesla, but if I was, Microsoft would definitely be there. Great appreciation, awesome dividends, and a fantastic company with a great future. What is there not to invest in? But if you guys are a Tesla bull like I am, then check out how many shares you need now today to retire off Tesla. I have to do an update on this because of the prices, and there's gonna be a stock split soon, so stay tuned for that. But you still will find good value here, and you will probably be surprised how many shares you need now to retire by 2030 on Tesla. Check it out, you won't be disappointed. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.